Hi guys, welcome to our channel. Today we are going to learn accounts, the basic rules of accounting which is going to be used for any kind of journal entry which you have to remember in every step of your accounting practice, so that when you know this basic rules you can solve any type of accounts and any journal entry can be posted very easily. So the first thing we need to understand is the three types of account. First, there is personal account, real account, and nominal account. So the first thing we are going to look at personal account. By the name itself, you know it is a name of a person or organization. So, which includes the rule of this accounting is debit the receiver, credit the giver. We will look on to this in the next slide in the example. Next is real account, which includes purchase, sales, cash, bank. You have to remember in the real account is debit what comes in, credit what goes out. That's all. So much you remember. Nominal account, expense, income, gain, losses. So in this what you have to know is interest received or paid, rent received or paid. This is just an example. And debit all income, expenses and losses, credit all incomes and gains. So when you can take down this notes or take a screenshot of it, this is the basic thing rules you have to just remember whenever you're solving a accounting journal entry. So with the small example we will just look on to our rules, how to apply it. So the first example is we purchased goods from Ram. We have written here we purchased goods from Ram. So it is not mentioned by cash. It is given the name of a person. It is a Ram. So they have not mentioned it by cash. So if it is not mentioned by cash, it may be by credit. So they have specified the name. So why they specify the name? It will be by credit because when we do a cash purchase or cash sales, we don't need anyone's name. When you are already paid the money to the shopkeeper, for example, why do you want to remember the shopkeeper's name? You wouldn't remember him because you have finished your transaction with him. But if you have not paid him money, we have taken it on credit, so we have to remember whom we have taken the credit. So in future basis we should know that we have to pay to Ram. So that's why they specify name. So in this account, always in a journal entry there is two, debit and credit. So for debit and credit you need two things. So just see in this what are the two things that will come. First is purchase and next from Ram. So purchase account and RAM account. So what is purchase account? We saw in the previous slide. Purchase account is a real account. So real account. So what is RAM account? RAM account is name of a person. So it is personal account. So if it is personal account, now you have to apply the rules. Here Ram is what? He is the giver. He is giving us good. So what's the rule? Personal account rule, credit the giver. So credit the giver. Purchase real account. Real account rule is what? Debit what comes in. So in our business point of view, if you see goods are coming in, so debit what comes in. So real account rule, debit what comes in. So how we will write the entry as purchase account debit to Ram account, being purchased goods from Ram on credit, because they have not mentioned it for by cash. They have just given it from Ram. If it is mentioned by credit also it is credit. If it is not mentioned also it may we have to take it as credit. So now let us understand in a better way with more examples. So there is an example I've taken as sold goods for cash of rupees 1 lakh. So here are two accounts, as we know that sales accounts and cash account. So in previous example we saw it was of credit. It was because they had not given for cash, but here we have given it as cash. So it is not credit. There is no person's name. So you take it as sales and cash. So we know that sales is what account? Real account. And cash is also real account. So real account rule is debit what comes in, credit what goes out. So here what is coming in when we sell a good to some person? Someone gives us cash. So cash comes in. So when cash comes in, it is debit what comes in. So cash account debtor 1 lakh and credit what goes out, sales. So goods are going out to sales account 1 lakh. Always you make sure you remember the simple trick is the when you learn purchases is debit, so sales is opposite of purchases, so it is credit. So the simple trick you can remember in your exam time. So being sold goods for cash. Now example 3. Here we have taken an example of Kavya paid rent of rupees 30,000. Okay, it is, they have not mentioned it cash or credit, but it is written as paid. So when it is written as paid, it is obviously known as it is cash. It is already paid. There is no any future payment as such. So we take two accounts here, Kavya and rent. So here Kavya is a personal account because it is a name of person, and rent is, what is rent? Rent is a nominal account because it is a expense. It is not a good or not a person or not bank or not cash. It is just a intangible thing. It is a intangible thing which is occurring. So ex it is a expense. So according to our rule, Kavya is a personal account. So the rule of personal account is debit the receiver, credit the giver. Your Kavya, what is she doing? Paying the rent. She is a giver. So it is a credit. And nominal account rule is debit all expenses and losses, credit all incomes and gains. So rent is a expense for us. So what we have to do? Debit all expenses. So rent should be debited. So the entry will be rent account debtor 30,000 to Kavya account 30,000, being paid rent of rupees 30,000. So let's go to our next example. It is deposited rupees 50,000 in SBI bank from HDFC bank by check. This is bank to bank entry. Bank to bank entry is a contra entry. So bank to bank entry is, now SBI also is a real account, HDFC bank also is a real account. So real account rule is debit what comes in, credit what goes out. Here deposited 50,000 in SBI. So the money, where is it going? Inside. It is going inside SBI. So debit what comes in. So SBI is a debit what comes in. It from HDFC it is going out. So credit what goes out. So entry is SBI bank account debtor 50,000 to HDFC bank account 50,000, being deposited rupees 50,000 from HDFC to SBI. SBI money is going in. So in debit what comes in. From obviously it's going out from HDFC. So credit what goes out. Next example is in received interest on bank deposit of rupees 500. Here we can look as interest and bank, two accounts. So interest is a nominal account, bank is a real account. So nominal account rule is debit all in expenses and losses, credit all incomes and gains. Received interest, we are receiving interest, so it is a income. So as a nominal account, interest is an intangible thing, we cannot see it, but we are receiving it. So credit all incomes and gains. So interest is a credit entry. Bank is a real account. So real account, bank is our bank. We are getting interest in inside our bank. No, it is coming in our bank. So debit what comes in. It is inside our bank itself. We are receiving the interest. So bank account debtor 500. Debit what comes in, because it is a real account. Nominal account interest or incomes and gains. So 500 being received interest on bank deposit. Hope you all understood what we have learned today. We have learned the golden rules of accounting, and we have learned an example of purchase, example of sales, example of rent, a nominal account, example of bank to bank entry, and example of a nominal and real account, now interest on bank. So hope you all understood, and please share your comments so that whatever your doubts is can be solved in the comment section. And thank you for watching, and please do like, share and subscribe for more upcoming videos and more upcoming learning, and which will help you all to make your exams easy.